My name is Andrew White, CEO of CHAR, and I'm looking forward to taking you through our corporate presentation, either as an introduction for those new to the story or to highlight some of the key milestones we've achieved so far in 2026. This presentation is available on our website, so you will have the ability to download it and take notice of the forward-looking statements. So before we get into the deck and what CHAR does and all the exciting things we're doing, just to highlight the overall thesis of the presentation and some of the things I'm going to return back to as we go through the deck. Why invest in CHAR, and really why is now the right time? Because right now in 2026, we're evolving and moving from a number of years of development work into that execution, commercial operations. And really we're at such a critical inflection point that it's a really exciting time to get involved with CHAR. So why is it so exciting? Well, first, we're de-risking our first facility. So has entered into commissioning Q1 26. As I'll show, we have a path to about 130 million in project level revenue per year and 42 million in free cash flow per year across 5 facilities we have either under construction or in development. We've got some world-class strategic partners providing both validation and capital to build out these projects. A proven technology with long-term contracted revenue, up to 20 years for things like renewable natural gas. So I'll explain a little bit more about that, of course. We very recently signed a 5-year, 62,500 ton biocarbon offtake agreement. So that really helps underpin both project development as well as continuing to validate the market demand for this product. And we have multiple growth vectors. So we have our core facilities that we're building with partners, but we're part of the overall ownership. We have opportunities to license the technology into Europe. And we also have the opportunity to deploy the technology for PFAS destruction. So that's the destruction of forever chemicals. And all of these opportunities really create an option to have a strong margin profile with non-dilutive project level financing. So what is it CHAR does as the first step and really the introduction? So our technology is in this middle picture here, and it's called high temperature pyrolysis. So high temperature pyrolysis, all you really need to know about that is high temperature is about 850 to 1,000 degrees Celsius, and pyrolysis means without oxygen. So we're basically cooking stuff at high temperature without oxygen. And what we're focused on cooking or thermally treating is wood waste. So this picture here on the left of the screen, that's wood waste that is being accumulated. And in this case, it's for our project in Lake Nipigon. We basically take this wood waste either from forestry operations or processing or harvesting residuals or even construction demolition wood waste, but clean wood waste. And we process it at these high temperatures without oxygen. And when you process at high temperature without oxygen, you can't burn the material because there's no oxygen to burn it. So what we're actually doing is called thermochemical conversion. So we're basically cracking the wood. So we crack the wood into 2 components. One is a gas, and that gas we can further upgrade into renewable natural gas. So this is the equivalent of natural gas as far as the pipeline is concerned, but it's of course made from renewable resources. And what's really exciting about that market is thanks to the demand, we can sign 20-year offtake agreements in that space, which really help underpin the security and the revenue of a project. The other product we make is biocarbon. So this is a solid material. Closest analogy is charcoal, but it's a little bit more advanced than that. And once we produce it out of our high temperature pyrolysis process, there's some further upgrading. We have to kind of squish it together to make pellets or make briquettes. And that material is a drop-in replacement for metallurgical coal. So 1 ton of metallurgical coal gives you about 3 tons of greenhouse gas emissions. 1 ton of biocarbon doesn't give you, in its use, any greenhouse gas emissions. And sometimes there's a little bit around its life cycle for transportation and the like. So we say we're generally reducing greenhouse gas emissions by 2.5 tons per ton of biocarbon used. And it's critical that this is a low-cost swap. So that means, metallurgical companies can't invest tens and hundreds of millions of dollars to use this product. It's got to be a drop-in replacement for it to be adopted rapidly. So off-takers for this include ArcelorMittal Dofasco, the steel mill in Hamilton, Ontario, and Alchem Metals, the ferrosilicon producer in Saguenay, Quebec. And then when we look at why this is an exciting time to be in this market space, it's really how we're seeing the market pricing grow in a pretty rapid amount of time. From 2022 to 2025, we're seeing biocarbon pricing more than doubling, and we're seeing RNG pricing more than doubling. So that creates a really awesome opportunity for the development of projects and the security of both revenue and profit from these projects. So as we develop the technology, we've worked with a number of key industry partners, and now we've really been able to secure these strong strategic partners. So I'll start with ArcelorMittal. So ArcelorMittal, one of the world's largest steel and mining companies, and they're really validating the demand for the product. So they did invest in CHAR back in 2023 after an extensive search on different pathways to decarbonize the steelmaking industry. They provide a global steel industry validation. We know it works, and we're working with them in that. And along with the investment, ArcelorMittal's plant in Hamilton, Dofasco, signed a biocarbon offtake agreement. So they're an investor as well as a client. Alchem, we very recently signed an offtake agreement with them as well for 62,500 tons of biocarbon over 5 years. And similar to ArcelorMittal providing validation in the steelmaking space, Alchem is providing validation in the ferrosilicon industry. So both of those industries use what's called an electric arc furnace, but you're basically putting different ingredients in them to produce either steel or ferrosilicon products, but both need solid carbon as part of the chemistry. So they have their nuances and some critical elements, and we've been able to validate our product in both market spaces. In the bottom left on the slide here is the BMI Group. So the BMI Group is both an industrial landlord as well as an industrial general contractor. And so where the alignment works really well with them is their business model is to acquire former and legacy pulp and paper mills. So they've acquired a number of them. Our Thorold facility, which is our first facility I'll talk a little bit more about, is at a former pulp and paper mill that was acquired by the BMI Group. And the nice thing, of course, about collaborating with a strategic partner like the BMI Group is these pulp and paper mills are in strategic locations focused on forestry sector opportunities. So the feedstock is really going to be able to be brought to these facilities. And so we've already got kind of a head start on some infrastructure. You know, there's power, there's gas, there's all sorts of other infrastructure that helps support the pulp mills that can be leveraged for a high temperature pyrolysis project. They've invested in CHAR corporately, and they've also committed both money in as well as future commitments to project level build outs. And then finally, biomass security is always a critical element of any project that's using biomass. And so by partnering with Lake Nipigon Forest Management, Inc., which is owned by the four First Nations communities that operate in the Lake Nipigon Forest, we can secure that biomass and we can secure that feedstock. And when we look at our project models, the amount of wood waste and wood residuals that are available from the Lake Nipigon Forest and the forestry operations, if we were able to take all of that and convert it into our end products, we'd be looking at about 80 million in potential revenue. So this is biomass that's available. It's wood waste that's available. It's not sort of just a market number. And, you know, if only we took 1% of a market, like this is available to us as we grow and we scale our businesses. So these types of partnerships are crucial to rapid growth and longevity of our projects as well. So we're thrilled to have all the validation that these various partners from different elements of the supply chain play in the growth of CHAR Tech. Revisiting what I said right at the beginning and why 2026 is an exciting year for us is it's really the convergence of these three simultaneous catalysts. So, you know, our first commercial facility getting into revenue generation, the demonstration of PFAS destruction and that validation, being able to show that as that comes along through the latter half of 2026. And then some strategic growth opportunities beyond our organic pipeline, which is primarily the acquisition of Alchem's biocarbon operations, which I'll talk a little bit more about. So we look at revenue ramp, even just from the Thorold facility, you can see we can grow revenue from a project basis pretty quickly. So that's our own project. When we look at this emerging vertical of PFAS destruction, it's a massive, massive industry where the presence of PFAS really makes it very difficult to properly dispose of what are called biosolids. So biosolids being the dried sludge from a wastewater treatment plant. If those are contaminated with PFAS, they have to be treated, or the cost to dispose of them is quite high. So you can see we have a catalyst pending there. So we are working with Synagro Technologies and the city of Baltimore. We've deployed a demonstration kiln to demonstrate the destruction of PFAS, and we're looking forward to be able to share the results of that operation very soon. So we look at our pipeline of those 5 facilities. We have Thorold, which is live, and then we have Saguenay, Lake Nipigon, Espanola, and Saint Félicien. And with those combined, we're about 130 million in revenue potential. So where do those projects fit on a map, and kind of how big are they all going to be? So you can see we have 2 in construction, Thorold and Lake Nipigon. Those are combined going to be about 25,000 tons a year of biocarbon and over 1 million gigajoules per year of renewable natural gas. We have 2 in development, sorry. We have Espanola, which is with the BMI group at a former pulp and paper mill located in the town of Espanola. And then Saint Félicien, we're building out a project there as well. And then you can see we've highlighted our 2 additional projects, the one being Baltimore. So that's the PFAS destruction project. And then the Saguenay project is the biocarbon production facility that we acquired from Alchem this month, so April of 2026. So moving from the map of our projects in construction and in development to a bit more of a timeline view, what you can see on this slide is how we're going to roll out these projects to both optimize our capacity to build them all, while also getting initial production of biocarbon online as quickly as possible, followed by that renewable natural gas expansion. So you can see bringing projects online, getting them into revenue as quickly as possible, and then either expanding by adding more kilns to increase the production capacity, and then adding that renewable natural gas. So what we're really showing is by the end of 26, Thorold into production on phase 1 and phase 2 under construction. Our Saguenay facility moving into operation towards the end of 26 into 27. And Lake Nipigon, which already has the feedstock components being built at the project site, to have those kilns being built and installed at that facility as well. And then the other projects follow suit to get all of these 5 projects into full operation, all the phases, full revenue before the end of 2029. So now I want to talk a little bit more specifically about our different projects. So the most recent one, which happened in the last week here of April, depending on when you're watching this video, either last week or in April. So we acquired Alchem's Saguenay, Quebec biocarbon production facility. So as I mentioned earlier, Alchem is a large ferrosilicon producer. They have a ferrosilicon processing facility in Saguenay, Quebec, and then separately they built their own biocarbon facility to be able to demonstrate the production of biocarbon. So we acquired that facility and all the associated assets. We acquired the proprietary intellectual property that has been developed, and that proprietary intellectual property is all about making sure the biocarbon works in ferrosilicon arc furnaces versus steelmaking arc furnaces, which is really where our focus at CHAR had been for the last little while. So it really expands the market opportunity. Not that any of these markets are small by any means, but it really expands our ability to service the metals industry more broadly with biocarbon for decarbonization processes. Along with the acquisition, we were able to secure a 62,500 ton offtake agreement. So that's a 5-year offtake agreement, so 12,500 tons per year of product. And of course, as I mentioned, it unlocks some pretty exciting new market opportunities. So when we look at the process flow of how does the Saguenay facility work versus, say, a Thorold facility. So the Saguenay facility takes in biochar, which is the output, the direct output of our high temperature pyrolysis kilns. It then needs to go through some additional processing, agglomeration, so making pellets or briquettes. That's really where a lot of the intellectual property lives, and then that material gets sold to the final user. So in some places like Thorold, we're going through the entire value chain in one place. So we are making briquettes and pellets in Thorold. In Saguenay, it'll support some of our Quebec operations as well to bring in biochar. And we can bring in biochar from other sites like Espanola and Lake Nipigon. So it gives a nice flexibility on our internal supply chains as well to increase production more rapidly and be able to get product out the door. So that's our Saguenay project. Thorold is now into commissioning, phase 1 biocarbon into commissioning. So this picture is of one of the 2 high temperature pyrolysis kilns that will be installed on site. This one has a 7-foot diameter heat tube. So I have one of our operators there standing at the end of the kiln just to give you a sense of scale. So it'll be 2 of these in Thorold. Ultimately, through phase 1 biocarbon production, we'll be able to see revenue in around the $9 million per year range, EBITDA of 3, and free cash flow to the equity partners of 2.5. When we get into the biocarbon and renewable natural gas, you can see all of those numbers increase pretty substantially as the RNG and the full opportunity of the biomass processing comes to play. The project itself has received $8 million from BMI directly into the project, as well as about $12 million from government to get this project into operation to showcase the benefits of HTP and how it works and how we can roll it out across Canada. The other project we have under construction is our Lake Nipigon project. So that project, because of its location, kind of halfway between the town of Nipigon and the city of Thunder Bay, there's a lot more biomass available, and that's secured through our partnerships with Lake Nipigon Forest Management, Inc. So because of that, we can build a much larger facility without risking our supply of biomass, which is great. As I mentioned earlier, there's a substantial amount of residual biomass available from our partners at Lake Nipigon Forest Management, Inc. So as we build out this facility, you can see it's already under construction on that picture. And we're going to phase it out again, as I mentioned in my earlier timeline slide, of first biocarbon production, then increasing biocarbon production, and then adding in the RNG. And you can see that both in the key milestones, but then also in how the revenue will roll out from the facility. And of course, biocarbon produced here can support existing offtake agreements from folks like ArcelorMittal, as well as Elkem. And a couple additional pictures of that Lake Nipigon facility. So in the top left, you can see the biomass being stockpiled for us. And kind of back in the background of that picture, you can see a large piece of yellow iron to give you a sense of scale of the biomass that's already being accumulated. And then you can see our partners at Lake Nipigon Forest building out that initial infrastructure. So these are what we would call chip drying tents. So they'll hold wood chips made from the residual biomass, allow them to dry, which means we don't need to install a dryer. This is sort of a natural drying process through basically big radiant floor heated tents. And that radiant heat comes from waste heat from our high temperature pyrolysis kiln. So there's a nice energy recovery opportunity there. So that just gives you a sense of the scale and the size of the projects that we're building. The other opportunity that I mentioned earlier is this PFAS. So PFAS being polyfluorinated alkyl substances. So these are the forever chemicals that you've heard about. These need to be eliminated from biosolids before those biosolids can be used. So biosolids basically being dried sewage sludge. And if there is PFAS, then it creates a substantial waste challenge to the proper disposal of those PFAS contaminated biosolids. So what have we done and what have we proven? We built the first, commercial high temperature pyrolysis deployment for the destruction of PFAS and biosolids. So that was done in Baltimore in partnership with the city of Baltimore, as well as Synagro Technologies, who's owned by Goldman Sachs. That ran for 6 months, and because it's a commercial demonstration, we plan to shut it down over the winter. So we're bringing it back into operation now that the weather's warmed up again, to keep running and to keep generating this data. But the data from that first 6-month test has been collected, and it's been reviewed by third parties, and we're expecting to be able to provide more information on that as we get through calendar Q2 here of 2026. But what's really important is the confirmation of the permanent destruction of PFAS. So it's not just the filtration or shifting the problem from one place to another. It is destroying those PFAS molecules so that they are just no longer a problem. And why this creates an opportunity in excess of building our own projects in the woody biomass space is that there's over 23,000 US wastewater treatment plants that need PFAS solutions. And really the deployment pathway that we're pursuing here is through licensing. So all the slides I presented previously about building our own projects, that's really where our focus is going to continue to be, is building our own projects for woody biomass processing to make biocarbon and renewable natural gas. That's what our expertise is. That's what we know how to do. And that's where there's some really good long-term opportunities to be part of the ownership of the projects. With PFAS, it's a massive opportunity with some really fantastic players who can bring this technology forward quicker without us having to go out and build our own projects. So because it's much more of a built market, it makes a lot more sense to go through that with partners who can deploy the technology quickly at pre-existing facilities. And to give you some pictures there, this is our PFAS destruction project in Baltimore. The picture at the top left is the deployment. The picture at the bottom left are the raw biosolids. So you can see it's kind of these dried pellets. And then the PFAS-free biochar is on the right here. So that's been produced and shown. You can see it changes color a little bit as we process it into that biochar. And then this picture in the top right is a presentation that was done at one of the premier biosolids conferences, where we co-presented with Synagro on how this project works and the benefits of it. So again, a really great opportunity to leverage the technology in another market vertical and bring in some revenue through technology licensing and deployment. So finally, to paint the picture of where we are today from a public markets perspective, we are about 13% insider ownership. And you can see we have our strategic partners, ArcelorMittal and BMI Group, as large vested shareholders. And then the rest of the shares are mostly in retail with some institutional participation. So we have this as our share structure, but we also have some important highlights on the project level investments that we've been able to secure over the past couple of years to build projects, which don't show up necessarily on the corporate balance sheet, because a lot of this went directly into the projects that we're building. So with that, I want to thank everyone for tuning in and for listening to the presentation. As always, either myself or Galen are available to answer questions, which we look forward to. We have our annual general meeting coming up soon if you're watching this before May 7th. And if you're watching this after May 7th, please pay attention to our Yes Express, our monthly newsletter, as we'll be coordinating investor update presentations every quarter following the AGM presentation on May 7th. So thank you all very much. And as always, we're here to answer your questions.